Palisade Global Investments is pleased to present the Hard Asset Conference on Jekyll Island, with keynote addresses by Eric Sprott and Dr. Edward Griffin, author of The Creature from Jekyll Island. The event will be sponsored by Triumph Gold Corp, currently drilling its 100% owned Free Gold Mountain project in the Yukon, and by Mexican Gold Corp, just weeks away from publishing its maiden resource on its Las Minas Gold project in Veracruz State, Mexico. Come join us at the Jekyll Island Club from October 19th till the 22nd. The event is limited to just 50 participants. Visit palisadeconference.com for more information. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. And returning on the program is Jordan Roy-Byrne. He's the publisher of The Daily Gold. Jordan, welcome back to the program.
Hey, Colin. Thanks so much for having me.
Yeah, I feel like we keep getting you on more and more often, but you've been one of the few in the gold camp who's accurately been questioning or bearish of the gold stocks over the last couple months. And I think you've been more accurate than most in predicting where these stocks were going to move in the near term. Wanted to get you back on today because there's been a lot of chatter over the last week with gold's action moving upward that we're ready for a breakout. A lot of people are saying the charts are preparing for gold stocks to potentially break out, and now we have to see which way they break. So Jordan, I want to get your opinion. Are we ready for gold stocks to go?
Well, thanks for the kind intro, Colin. I should mention that I have been expecting the sector to break down out of this consolidation, and we did that interview, I think, in early July, and I was pretty bearish. And then for a week, things really dumped lower, and I was telling subscribers, okay, here we go, it's breaking down. And then when we started to go the other way, a day or two after that reversal, I noticed that sentiment indicators were extremely bearish. So at that point, I informed subscribers that, it looks like we're going to have at least a couple week bounce. But, the range I had for gold coming back was 1240 to 1260, and it went above 1260 at the end of last week. So it's just really interesting, Colin. I mean, there's a lot of information here that can put you into really any camp that you want to be in. I mean, what's bullish, you could say, for gold right now is, look, it broke its 2017 uptrend when it lost support there around 1230, 1240, but then it rallied all the way back and got up above that. And as I just said, it also rallied up and got back above 1240 to 1260. I mean, in a real bearish trend, the recent rally that we've had, we would have seen gold maybe peter out at 1240 or 1250, then come back down and retest 1200. But that hasn't happened. And in addition to that, Colin, the commitment of traders report, the net speculative position, I measure that as a percentage of open interest. And that's really important to do because it gives you a consistent look over time. It's easy to compare, how does today compare to 3 years ago, 5 years ago, 10 years ago, et cetera. And the low, at the end of 2015, when gold bottomed at 1045 an ounce, the low was almost at zero. Like, it was basically neutral. You had literally no net speculative position in the market. Now, recently, I think it got down to 15.5%, which is the lowest in, I think, 12 or 18 months. Now it's back up to 22.3%. So, but if you look at where gold peaked in 2016, I mean, that was, I don't have the chart in front of me, but that was, I think, above 50%. So to make the story short, there is a lot of room. If people want to speculate on gold, there is a lot of room for that to happen and for the price to go up a lot here based on speculation. And on the flip side, that also means that there's not a lot of speculators in the market to push gold that much lower. So that would be the bullish take there. And for, I mean, I'm kind of on the sidelines. I have been bearish, and I mean, over the last week, I mean, it's proven to be wrong. But for me to turn really bullish, we really need to see gold make a strong move above 1300. I know that it's kind of breaking above the trend line. If you go back to the 2011 high and you draw that trend line, I know that some people place a lot of emphasis on that. To me, the 1300 is really a much more important level. If gold can make a weekly close above 1300 or even a monthly close above 1300, I mean, that would be really, really constructive and would put it on its way back to rallying back to 1375. So for me to turn bullish, we would need to see that. Now the bearish take would be that the dollar right now is very oversold. It's reached very strong support. Sentiment indicators are at 3 or 4 year lows. So the dollar is likely to rebound. And although the dollar has had this big decline, I mean, it's down, I think, almost 10% since late December of last year. And it's down about 10%, and it's at a 13-month low. Over the last 3 or 4 months, precious metals have basically trended sideways, even though the dollar has been plummeting. And so what explains that is gold against foreign currencies has just been really weak. I mean, the price this year has been diving against foreign currencies, but it did hit support, and it is starting to rally. But what that action would tell me, if I want to be bearish, is gold is really going to get hit when the dollar rallies. Because, look, we see the flip side of this. We've talked about this in years past. When gold is going down in dollar terms, or the dollar's going up, but gold has been holding up well, it's only going down a little bit, that's always a sign that gold is going to have a big rally when the dollar stops rising. Now we're seeing the flip side. So that's what worries me if I want to be bearish. And so the three scenarios that you're getting to, I think the one scenario would be gold just keeps rising, it breaks above 1300. The neutral scenario is the dollar does rebound, and for the time being, gold probably settles back into a range from 1200 to 1275, but holds above 1200. Now, the bearish scenario is that the market could be making an important top here over the next couple of days. The dollar has a big rally, and gold it tests 1200 and ultimately breaks that and goes lower before the end of the year. So I know that's a lot to take, but it's really hard to definitively say one way or another which way is this going to go. But I do think that a dollar rally looks pretty likely here. So I would be surprised if this move would kept going and gold is able to break above 1300. But I mean, it is a possibility. I don't think it's a strong possibility. I mean, my guess would be that gold probably settles back, maybe holds above 1200 on the first test. Now, with respect to the gold stocks, which I think that was your first question, and I'm sorry I got away from that. It's so hard to call here because, yeah, they're up 3 weeks in a row, but their performance really hasn't been that great in terms of the dollar going down, as I said. I would really need to see, I mean, looking at GDX and GDXJ, I would really want to see this rally continue and see the miners close above their April highs on a weekly basis. Now, with respect to GDXJ, I think that's 34 or 35. I'd want to see a strong weekly close above those levels. And for gold, I think it's not gold, excuse me, GDX. I think the resistance there is in the mid to high 23s that I'm talking about. So I'd want to see a weekly close above that level. Now, on another note, Colin, I mean, as you know, I have my own junior indices, and these are much stronger than GDXJ and GDX. And this index I have has 55 junior stocks in it. So we're not just talking about a couple tiny dinky juniors here. I mean, this 55 stock index is showing a lot of relative strength. And so the junior sector as a whole, I mean, even with gold kind of going sideways to slightly higher this year, nothing that great. There's been a whole host of junior exploration companies that have been adding value to their projects, and their share prices have done really well. So it's a very intriguing, very interesting time here. The sector's turning towards an inflection point here in the weeks and months ahead, and we should get once we have some more time, be it another month or two, the market should really tip its cap and let us know which way it's going to go. So I mean, I know that's a really long answer, and I didn't really give you definitive one way or the other, but it's just with the evidence that's mounting on all sides, it's really difficult to make a call one way or another.
That was a bit of a long-winded answer, but I can tell in your response, and you might not have said it directly, you sound a little bit more bullish than you did a few days ago. Now, the major reservation that you brought up on a gold rally that I am really in agreement on is that U.S. dollar having fallen so hard, and yet gold just kind of staying even. And you said before that that simply doesn't happen, but maybe it does. I haven't done the research to look if that ever has happened. Is it possible that we're looking at too much of a micro picture and following too closely? Because gold was pretty strong against foreign currencies just a few months ago, and now you're right that it's not. But maybe gold will play a game of catch up here.
Yeah, I mean, it's possible that as the dollar rallies, gold could, maybe not plunge and maybe go sideways. It's just the one thing is I don't think I have some people who are subscribers who are saying to me, well, what if the dollar plunges below 92 and it goes to 88? Well, the dollar's already come down so much that gold. I don't think gold needs the dollar to fall that much more for it to really springboard. If gold is going to springboard a lot higher in a weak dollar scenario, it would have already happened. I mean, it's already had this big decline, and gold's already. I mean, I tend to believe that gold leads the dollar, and gold's already discounted. The dollar decline that we've had. Now, if the dollar, I don't think the dollar is going to break below 92 and have a major breakdown. But if that's going to happen, we'd probably see a rally for, I don't know, 2, 3, 4 months. We'd see a rally here. It'd be kind of a weak rally. The dollar would hold above those levels, but it wouldn't rally that much. That would kind of be a signal that the dollar is, later on risking a break below this key support around 92, 93. And in that scenario where we get a really weak dollar rally or weak dollar consolidation, and gold would perform really well in relative terms, and hold up or even trend higher above towards 1300 or even above 1300, that would be a really bullish signal, because that would be gold discounting in advance the future decline in the dollar. So and you're talking about gold against foreign currencies. I mean, gold against foreign currencies, as you know, Colin, has been extremely strong the last couple of years. I mean, it's been so much stronger than gold in dollar terms that the recent weakness, I mean, if we're looking at it in the short term, it's hard to know if that is the sign of like a bigger breakdown for gold in real terms, or if it's just a little correction based on what's happened over the last several years, which is gold has been very strong against foreign currencies, and it needs to cool off for a while. So it's, again, I don't know. I mean, there's so many conflicting signals here that I could sit here and we could do 2 interviews. I could do an interview with you being completely bullish and giving you all the bullish reasons why gold is going to break out and have a great rest of the year. But I could also do a bearish interview and tell you why, well, gold's not ready to break out. It's probably going to test 1200 again. We have some downside risk before things really go that much higher. So unfortunately, I mean, we're nearing a crossroads, and the evidence, as I said before, on all sides, it's really mixed.
Uncertainty makes it difficult as a trader to know if you should be long or short. I have a feeling that you'd probably, with an uncertain outlook like that, simply hedge against some long positions. But of course, if there's a big movement or an inflection point, as you stated, coming in the upside or the downside, you can potentially miss a move there. So without giving away your secret sauce and what you give to your premium subscribers, what kind of trading are you looking to do at this inflection point?
Well, I have been expecting a breakdown, so I haven't been trading things that well lately. But with respect to the stocks, generally, I mean, what I like to do, because everyone's different, but what I like to do is hold your winners, let your winners run. Because as I said before, Colin, I mean, there's companies that are doing great work this year, making great discoveries, and they've performed really well, even though gold has kind of been sideways to slightly higher. And so if you hold those types of positions and you have really good entry points, you should hold on to those. I mean, there's little reason to sell those unless they're up 500 or 1,000%. Then you probably want to take a little bit off the table. But I also like to cut my losses and dump my losers. I mean, if you have a bad entry point on something and it's down, and there's a risk that it could go a lot lower, and the fundamentals for the company have changed, I mean, those are positions that you want to cut. So that's how I would look at my portfolio. In terms of hedging, I mean, it's extremely difficult. I've been really successful doing it sometimes, but also I've not been successful doing it other times. So I mean that's very tough. I mean I think cash is having a good amount of cash is healthy. And I mean one thing I'm looking at here with respect to the stocks is um, exploration companies. I think are they're really outperforming because you can get companies that make great discoveries, and whether the gold price is 1,500 or 1,200 or 1,100, it really doesn't matter that much. So those are the companies that I would be looking at now, the exploration oriented companies. Uh, Producers and optionality plays. I mean, I have an index of both of those. They've been weak recently, but look, if the market has bottomed, then there will be great buying opportunities in these things. But to be conservative, I would kind of wait until the market tips its cap, and then after that point, you can know, well, is this a good time to get into producers and optionality plays, or should I, or if gold's going to break down, I can wait a little while and buy these a lot cheaper. So that's kind of how I'm looking at things right now. I mean, my portfolio has kind of been neutral, so I haven't participated in the strength in the last couple of weeks, which is disappointing. But we'll see. I mean, if we are going to get a breakout, then there will be plenty of upside after that breakout. So I mean, that's how I'm looking at things with the market and with respect to the companies.
Jordan, two more brief questions. First of all, I think I can mention this company because I know that you've mentioned it more publicly the outside of your premium setting. You've stated that Triumph Gold is your favorite optionality play for various reasons. You also just mentioned that optionality obviously goes up in bull market periods of the gold price going up, and they could fall off quite a bit more in a bearish setting. What's your thoughts at this point on Triumph Gold as an optionality play, and also with drilling going on from the Gold Corp money?
Well, I mean, I think Triumph as an optionality play is just fantastically positioned. I mean, I think that stock is going to be an absolute monster when gold goes higher, regardless of what they find or don't find with respect to their drilling. And Triumph is very intriguing because, as you know, Colin, it's very tightly held. And I mean, that's what you want to see in an optionality company, a very tight structure, very tightly held. As far as the retail float, you want that to be as small as possible. I talked about that in a recent article. And with Triumph, it's interesting because that's an optionality play, but it's not super liquid like some of these other optionality plays. So that's one where and that's already corrected quite a bit. So I mean, if let's say gold would go down to 1,100, it would be difficult to know, okay, what price would Triumph go, and you would have no idea where it might bottom, because if enough people accumulate that, it could bottom well before gold. And it's just so in that kind of situation, that's a kind of situation where with that kind of stock, you may not be able to wait until after gold bottoms, because you risk missing a really large move, and you just have to try and accumulate that on weakness, just accumulate bits and pieces on weakness. Because of the factors I mentioned. It's not like some of these other optionality plays where they will just follow gold, and you can wait. If gold goes down, you can buy those much cheaper. I don't know if that would happen with Triumph, but I love the way the company is structured and set up. And look, the drilling that they're doing this summer, I mean, it's low risk from the standpoint that, I mean, nothing is factored into the stock. So if they find something really good, I mean, the stock can make a massive move higher. I mean, Gold Corp acquired a 20% position. I mean, those guys are much smarter than you and I, Colin. I mean, sorry to admit it, but that's the fact. So they obviously see something there that's worth investing in. And in addition to that, I mean, I don't have the numbers in front of me, Colin, but I know we've talked about it. Then the enterprise value on that company, when you look at the market cap and you take out the cash, which I could be wrong, but I think recently it was maybe 6 or 7 million, and the market cap was just so tiny. I mean, those are, as far as optionality plays, I mean, those are the things I really want to find. And Triumph, far and away, is number one in that regard, and that's why it's number one overall. Because if you think gold is, I mean, if you're looking for a way to play gold going to 1550 or retest the all-time highs again, this is a stock that's going to do fantastically well in that environment. I mean, I can't think of any other optionality play that would perform better.
Yeah, in regards to the enterprise value, our head of research, CJ, looked at the price of Triumph against all other companies listed in Canada, only taking into account the 3 million gold ounces, not the 6 million gold equivalent, and it's still the cheapest listed in Canada, so it's very interesting. Hey, last question for you, Jordan. We only have about a minute here. The Canadian dollar, which is in many ways linked to the mining business, has really outperformed against the dollar just in the past few weeks. Do you make anything out of that move, or is it just something oversold, reverting to the mean?
You know, that's a great question. I haven't looked at it that closely. I know some people say it leads precious metals. I'm not sure about that. The one thing I'd worry about with Canada is the potential housing bubble there, and so I think at some point you could see the Canadian dollar weaken. But looking at the chart, I mean, that got super oversold from 2011 to 2016, and now it looks like it's made a new 52-week high, or even it looks like close to a 2-year high. So the Canadian dollar looks good. I think it could move up a little bit more before it might correct. Sentiment's really bullish on it right now. Is that a leading indicator for gold? I'm not really sure. I don't know. So those are my views on the Canadian dollar.
Very good, Jordan. Thank you for coming back on the program. Jordan is the publisher of The Daily Gold, which can be found at thedailygold.com. Jordan also does a weekly or every other week technical review on Palisade Radio, which we send out in the newsletter. Now, Jordan, thanks for coming back on the program.
Thanks so much for having me, Colin.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be? It actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?